following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome to the Option Block. I hope all of our listeners out there are having a fun and indeed a profitable start to the old trading week. My name is Mark Longo from theoptionsinsider.com, as well as a variety of programs here on the growing concern we call the Options Insider Radio Network. And I hope all of our listeners who did have a chance to make it down to FIA last week and watch our live show had a fun time. The rest of you can catch it online as usual. I'm sure many of you have already heard it, or you even might have a chance to grab some video. I know FIA videotaped several of our shows, including the Option Block, so we'll see if we can get that video up there for you on the optionsinsider.com so you can see our lovely faces as we interact together.
And then you'll find out why we're actually on the radio.
A bunch of faces for radio, as they say. But that voice is, of course, our Monday Mike, a.k.a. Auntie Mike, a.k.a. good old Mike Cavanaugh, the man holding down the fort there at Know Your Options, Inc. in those swanky new digs, sir. Welcome back to the show, Auntie/Monday Mike.
I'll go with Monday Mike. I like the buzz to that. Good to be back.
We missed you on the live show, sir. I think our dials got crossed on the time or something.
I think I got caught up in that Occupy Wall Street mob that was forming outside of the hotel.
Did they beat you with sticks and stones?
They wouldn't let me in. I said, please let me by. I'm not part of the 1%. I'm on the Option Block. They didn't believe me.
They said, you look like one of those raging 1%ers. We shall now beat you with sticks. And,
exactly.
And listeners, we are also joined by the sultry tones of one Tim Navabi from Options Express, a.k.a. Mr. T-Nav. Mr. T-Nav, welcome back to the show, sir.
Thank you very much. I'm glad to be here. I always enjoy doing the show, and I missed doing that live show, but I'm glad that Alex was there, and Jim was there as well.
Alex and Jim held down the fort admirably. I felt bad for Jim. He kind of got thrust into the fire there during his first real episode live from the stage, but it worked out fairly well. And of course, Alex, I can just toss to Alex and then turn off my mic for a while, so it's kind of nice. He has that ability to fill some time for me, which as a host I always appreciate.
Yeah. No, it was very good. It was a nice show. I listened to it already, and it was nice. I liked it.
I always threaten to Alex. I say, one day you're going to have to host a show on my network. We'll just call it Option Stories with Alex Jacobson, and he can just sit down and run by his tales of yesteryear and all the various people he has bumped into on his various jobs throughout the land of options, and it would be an interesting show, I'm sure.
Yeah, he's shared a few stories with me, and they're pretty good. So I'm sure he's got plenty more. and yeah, so.
All right, and with the team mostly assembled, we should be joined by the Seabass momentarily, but we will start without him and dive right into the trading block.
The Trading Block.
All right, and welcome to the Trading Block. This is, of course, the portion of the show where we dig deep. We illuminate the activity that's been moving the market, that's been lighting up the tape, indeed, that has been trading today on the street. And it was another dark, another dire down day on the old street, which I think we were due for after so many up days lately. The S&P closed down about nearly 2%, or 24 handles, to almost 1,200 even, 1,200.86. And the Dow closed down about 248 handles to 11,397, also down about 2%. NASDAQ keeping in line as well, down about 2%, down about 53 handles to 2614. And the good old VIX cash surging back up from the mid to high 20s, up about 18% today to 33.39. So a lot of activity lighting up the boards. Of course, I was running in and out of meetings for most of it today. Auntie Mike, or / Monday Mike, what was lighting up your own personal tape today? What was keeping the fires burning over at KYO?
Yeah, I mean the big fire burner over here, the gas on the fire. We've been in a SPX position for the last couple weeks with a slightly bearish tilt, and it's been getting slightly chipped away at the further we ran up. We were in a monthly versus weekly put calendar spread. We had to come back our way a little bit today. We added a bear call spread to our already existing bear put spread. We'd somehow morphed our calendar from a weekly into a bear put monthly, and we had to come back in our favor a wee bit today. We're still looking at a small loss in the overall position, but we had to come back our favor today. Hopefully, we get a little follow through tomorrow and look for a bounce and potentially make a trade out of it.
So it sounds like the KYO leaning is that you're not buying into these rallies. You're thinking we got more down days ahead of us.
Yeah, the old what worked with the QE1 and the QE2 earlier this year, and we all saw those animated videos about buying the so-called dip. We've been staying away from buying the dip and more like selling the rallies, so to speak. The rallies we've noticed have been low volume rallies, so there's the follow-through hasn't come through from volume. It's gone almost from a lack of care. It's trickled the path of least resistance. The last 5 days, I think we rallied 1,500 points on the Dow with very light volume. So we stuck to our institutions and, still have a losing trade on, but it came back in our favor a little bit today.
Yeah, I tend to fall into that camp as well, as not exactly buying the rally. You and I seem to be of the minority opinion here, as a lot of people I'm hearing these days seem to be echoing that the worst is behind us. But we took the opportunity here. We've been trading in and out of a lot of some broad names, including Ford, over the past few weeks, and we're trading into and out of a lot of different positions. We ended up letting some of our short puts run towards the end of last cycle just because we liked the levels we were getting on the stock, and we didn't mind owning Ford there, but we also didn't buy any of these recent blips. As soon as we got some decent levels in Ford, we immediately dumped some deep in the money covered calls against them because we wanted to take our premium off the table before we think this is turning back to the downside again. So I agree with you then. We're taking any opportunity, any bump up in the broad market here to take some of our exposure off the table.
Yeah, I can't fall into the camp of, tulips and kittens and sunshine and roses at this point. I mean, when the headline comes across that Germany's shooting down any talk of a swift fix in the European Eurozone crisis, it's hard for me to say, oh, yeah, well, we'll let those guys figure it out while we take the S&P up to 1,300. I just don't see it happening.
Yeah, I agree. What about you, Mr. T-Knob? Are the puppies and kittens flowing in over at OX, or are the customers still on the bearish tip over there?
No, I mean, I agree with Mike. It's difficult to buy into this when there is such low volume. And yet it is, making moves that really are kind of, making people scratch their heads and saying, where is this coming from? But I mean, that's the market. It does what it's going to do, regardless of where people think it's going to go. and it's I think it's wiping out some bears right now, or making them sweat a little bit. But at the same time, yeah, it's like the picture really doesn't look good. I mean, they want to give the money, they don't want to give the money, they want to give the money, they don't want to give the money. So I mean, it seems like it's really exhausting a lot of people. And again today we even had lower volume, with a big move down. So pretty much what people were trading here at Options Express were things with earnings. People were trading IBM, people were trading Citigroup, Google, Apple, just something where they think, hey, I could, I think I can make some money here on earnings. But overall moves in SPY or directional plays they're not really coming across. I mean, I don't see many of them.
Interesting. So yeah, I think a lot of people are, like you said, just fatigued by the endless it's up, it's down over in Europe and the resulting turmoil over here. It just seems like it definitely is a lot to process. And every single day, it's the best of times, it's the worst of times, it's the best of times again. Now it's the worst of times again. Yeah, we're seeing a lot of that, particularly on, I think, your bailiwick, the retail side. Some of the savvy ones are trading in and out, but some of the ones who like to do maybe a few trades a month and then let them ride are starting to be a bit whipsawed by this and kind of just jump into the sidelines.
I hear deep voice people.
That would be the Seabass. Right.
What a great segue.
Yes.
Thank you.
This is why we have him on audio, ladies and gentlemen. That voice means we are joined by the Seabass, a.k.a. Mark Sebastian of Slinky.com, also known as OptionPit.com. Mr. Seabass, we were just debating.
We're actually giving away Slinkies at the Vegas Traders Expo.
I believe it. I believe you owe me $8 for that licensing deal as well.
Nice.
But
that's $8 per Slinky.
Per Slinky, of course.
Per Slinky.
More than a Slinky is worth. You owe
more
us.
than the 91 cents we're spending on the Slinkies.
See, if you didn't buy these cheap Chinese Slinkies and instead bought good North American steel Slinkies, it'd be at least $12 per Slinky, so then we'd be all set.
Oh, yeah. North American steel. I forgot. Oh, and I see that. It says U.S. Steel right on there. Made in Bethlehem, Pennsylvania.
Uh-oh. Quality.
There you go.
Yeah. But yeah, we were just debating the legs in the market right now and whether we buy into any of these rallies or if today's down day is a sign of things to come. And a lot of us here on the show have been talking about how we're selling premium or legging into some bearish spreads. What's your take on it? Are you buying all this upside, or are you thinking the downside is the way to go?
The way volatility acted today, it buys it, if that makes sense. The VIX reacted really strongly to this turnaround, and but we hold 1,200. I'm not sure we're running all the way back to that 1078 level. The way it feels like we should be stuck between 1150 and 1,200 for the next couple of months. So I'm not sure that I'm a big buyer of the rally, but I'm not a big buyer of a massive sell-off either. So I don't know if that makes sense, but that's kind of what I'm seeing.
Get some long gamma on and scalp like a madman as we vacillate back and forth.
Exactly. Gammatron, it's time for Gammatron. So
is that Megatron's older, nastier brother?
No, that was actually an old little tool that we had at Group 1 where you'd literally just tell it to hedge so many shares of stock every so many cents. It was actually I'd be long 50,000 gamma in Sun Micro. Probably not that far-fetched if you remember when it was $2.
Yeah, it was like a $4 stock.
Right, it's $2.60. So you're long $50,000 in Sun. You just tell it to hedge 5,000 deltas every 10 cents, and the next thing you know, you've got you've bought and sold $5,000 5 times in a day, and you've got $250, $300 in your pocket. Hey, it's better than a kick in the big toe.
I used to have my own Gammatron. It was called Me Working Limits all day long.
Nope, we just had Gammatron.
I didn't need any Megatron offshoot to do my gamma scalping for me, darn it.
When they finally shut that down, Barbecue, Jim Roseanne was like crying. It was hilarious, actually. I remember the day they turned it off because the only person still using it was Jim Roseanne. And he was like crying. He was so angry that they were shutting it down. But that infrastructure was just expensive and didn't need to be there. Limit orders is what they said, exactly the same thing you just said.
It does seem a little bit redundant, but hey, maybe
it was actually designed for before you could sit there and look at a stock quote. They had designed the infrastructure
deep dark days. Yeah.
They designed the infrastructure, so it was actually one of the very, very early direct order to the New York Stock Exchange systems that was out there. Actually, it was really cool, but by 2006 it was a little outdated.
Just a wee bit,
just a touch.
Yeah, yes, and Auntie Mike / Monday Mike. We don't have Uncle Mike here on the show to talk about his
Monday
medals.
Mike.
Yeah, he's opting for Monday Mike now.
Manic Mike, whoa.
That's right.
Wish it was the other Mike, whoa.
There we go. If our listeners are confused,
guy, whoa.
Send money.
Yes, please.
That should just be followed by send money.
For vocal lessons for Mark Sebastian.
Exactly.
It's in your own best interest, listeners, to do it. But yes, our listeners are confused. We do record on Mondays, even though you usually hear the show on Tuesday. So that's why he is referred to as Monday Mike. And indeed, Monday Mike, Uncle Mike is not here. He's not beaming in from the satellite office in St. Charles, Illinois today. So what action were you having on the metals front today, sir?
Metals front, big action over here. Big action to report. We actually we came in. We were long the October 150s, short the October 172 calls. So we had the own the underlying, short the call at 172 in October, long the October 150. Took a little bit of a bearish hint. The market was down a little bit today. We decided to bump up our hedge into the November. We went from the 150 up to the 160. So we tightened up the puts just from the aspect we didn't like the action. We didn't like typically a move like today would help bolster gold. You'd find a bid and you'd see a rally. It's been coming down, so we tightened up our exposure to gold today.
Yeah, this is not exactly a strong bullish sign for a day like today that gold can't catch a bid.
We saw it a lot in 2008 where the non-correlated become correlated. There's just when the market moves down big and hints at it might follow through, down is the only correlation that we could find. It certainly happened in 2008. We're not there yet, obviously, but I think gold, the GLD is trading at 163, 162.5, somewhere in that range. We just didn't want a 12-point cushion below.
And Mark and Mike, am I the only one that's a little disturbed by the fact that with a day to expire, the October futures are trading at a 1.1% premium to the VIX cash? I mean, that is I'll tell you, if you just wanted to trade if you were blind to the market and you just wanted to trade a statistical odd, the VIX 32-35 call spread is a sale and a half. But, the market really thinks that we're going to be down again tomorrow and thus implied vol up. But, boy, that's pretty nutso.
No, I was just talking to someone, speaking of VIX and VIX settlement, I was just talking to someone a couple days ago, actually at the FIA show, about how someone put online, I haven't had a chance to look at it yet, but we've always talked about manipulating that VIX print and how you can do it now with as little as $25.
How dare you imply that somebody could manipulate the VIX?
But the talk has always been you have to do size. You have to do size prints to move it any substantial amount. And someone just sent it to me. I have to take a look at it yet. But you can supposedly the crux of the article is that you can take $25 and move the VIX a substantial amount during settlement. And so I'll have to dig into it and see if it's interesting.
Don was flabbergasted when I saw him at the.
The inverse.
It's the square of the inverse.
Yeah.
I mean, it was. I was flabbergasted. Is there a better word for Don than flabbergasted?
Especially when you see him in his booth babe outfit, then you're pretty flabbergasted.
Then
you realize the man is dedicated to his cause.
I know.
Listeners, of course, we are talking about Don Schlesinger, my co-host for the Volatility Views show, and quite a distinct personality, if I do say so myself. Perhaps like Mark Sebastian, another distinct personality.
You should see his T-shirt. It says, "There's volatility in my pants, and everyone's invited." I was surprised by that.
Hey, the man's got to do what he's got to do when he's working the booth.
Family show.
But this just gets to our point we've been talking about for a while there, that there seems to be a lot of room to perhaps bring that index into the modern era with some tweaks. And
I kind of explained. There's a lot of things I don't like about that index. I actually think the VXO is a better index than VIX, to tell you the truth.
And actually, maybe we'll hit on that in a little while because we do have a question about which VIX product we prefer. Maybe we'll hit on that in our listeners' questions.
Oh, that'll be a fun one to go through.
If we get to.
Yep.
All right. That's going to do it for the trading block, and now we're going to roll right into the odd block.
The odd block.
All right, and welcome to the Odd Block. This is the portion of the show where we discuss the interesting and or the unusual options activity that's been lighting up the tape. And we're going to kick things off with a newcomer to the Odd Block, Chemtura Corp, ticker symbol CHMT. They closed today at $10.78, down about 53 cents, or about 5%. And as you might imagine, given their name, they are a marketer and manufacturer of specialty chemicals. So these guys usually don't light up the tape. They do an average daily volume of about 600 contracts. They did a whopping 4,000 today. And it looks like the bulk of those, actually almost every single contract that went up in Chemtura today. Actually, yes, every single contract except for a one lot of the Oct-10s. 3,916 of the December 12-half calls went up today. And that was including a massive, looks like a block of about 2,500 going up for around 70 cents. The bulk of these are all purchases, by the way, with the 99% of them were purchases here. So literally one customer today in Chemtura, and he's the sizable upside bull here, thinking the stock's got significant room to move to the north beyond the 12-half strike here. He's looking at picking it up around 13.20. This is a strike that has about 1,400 contracts open interest. So this is primarily all opening paper. It doesn't look like he's rolling from any other strikes here. Not many other strikes. There's no other strikes actually open that have enough interest to cover this. So this is all opening paper. And yeah, I love these names. One customer, one trade, all one direction. This is just odd block.
I wonder which way
here.
He's going.
Yeah, a lot to parse here.
I know.
But yeah, a sizable upside bull here in Chemtura. Uncle Mike, I'm assuming this is a standard KYO holding right here.
That's not Uncle Mike, my friend.
I'm sorry.
This is Monday Mike.
Monday Mike.
Monday Mike.
Monday Mike.
I was trying to figure out in the minute that you were talking to figure out as much as I know about this stock. I've never heard of it before. You mentioned it 20 seconds
Another
ago.
reason why it is odd block gold.
No, I think I had some of it at Benihana, though.
It's pretty good with a little teriyaki.
Exactly. You know, the teriyaki filet with the Chemtura? Yeah.
This one hasn't traded above that 13.20 level since actually relatively recently, about a month ago. So it looks like this one, he's not exactly taking a huge flyer that's going to break past north of 13.20 by December expiration. The thing's actually traded as high as nearly $20 back in May. So if this takes off to the upside, this could be back to those levels, at $20 levels. This could be looking like a decent winner. But I just love the one lot on the Oct-10s too. Someone came in and printed a one lot just to round it out, so it's not all on one trade. But yeah, there we go. Our odd block opener today is none other than Chemtura Corp, the single holding in the KYO portfolio.
Oh, nice.
That we were in cash until we did that.
Until you rolled into this 4,000 lot of upside here in Chemtura.
But just to make it a call stupid, we bought that one lot.
Nice.
You had to get a little time action. You had to get a little gamma in. You can't be all D. Can't be all vol. You got to have some gamma.
I mean, we had to get the ratios down. It took us a while to figure the right ratio. We had to rubberize a couple times.
Nice work on that one. Nice work.
4,000 by 1. That's the KYO patented time stupid. I like it.
Mm-hmm. Love it.
And Mr. Seabass, I hear you have another option blocks or odd block special you dug up for us here.
Oh yeah, this is the old option block special. We've got USEC Inc., the global energy company and supplier of low enriched uranium (LEU) for commercial nuclear power plants. And
so we've been outside of your Hasbro and retail wheelhouse.
It is, but it's coming in at a lofty $2.19. And vol was in 23% today, down to 206% at 30-day expiration.
Oh, this is classic. An odd block classic.
What they did, it looks like they bought a bunch of the Nove 2.5s, and then there was about 36,000 calls traded to about 2,000 puts in a $2 stock, mind you. They bought about 7,000 of the Nove 2.5s, look like a chunk of the 3s traded as well. We saw the JN2 3.5 call spread trade for about a quarter. That's actually not a terrible trade. And I saw one customer come in and buy some way out of the money calls. So there is some heavy betting that this sucker is going to catch a major rally. They provide transportation and storage and performs contract work for the Department of Energy, and apparently there's something going on there.
You know what this is? This is the terrorists planning to hit one of their uranium shipments, and they're loading up on the call spreads before they do it. So,
nice, yeah.
This is like the Bin Laden puts before 9/11. There you go.
You know what? My favorite part of the description is the company is deploying advanced uranium enrichment technology known as the American centrifuge. That's awesome.
Well, when your main customer is the Department of Defense, you have to do stuff like that.
We've named this the most spectacularly stunning, incredible technology ever. We're calling it the American centrifuge. Like, that's incredible.
It's like the Patriot Act quality.
I do like that one a lot, though.
And by the way, this call spread went up about 10,000 times, so this is
I know, it's a big
sizable.
trade. I mean, everything is pointing toward this sucker probably hitting $3 or $3.5. So if you've got a couple $1,000 laying around that you don't mind losing all of, this may not be a bad trade.
Very binary, the trading in USEC Inc. right now. Again, another one for the grandmothers and the retirees in the KYO portfolio to dive into.
Exactly.
That's
so. Well, no, I mean, Mike, don't you think that's a great trade against all your gold portfolio? You know, you've got you trade the uranium off of the gold.
Yeah, why not?
Yeah, exactly. Capture some of that low 206% vol and sell it when it gets back up to 230.
As long as you get the right ratio down, it's all about the ratio.
This is the name that I think Gamatron was born for. We should resurrect Gamatron just for scalping about dimes in USEC Inc. all day. All right, that's a perfect one, I think, to close out the old odd block on. That's a fantastic name. We'll keep an eye here on good old USEC. If any uranium shipments are hit in the next few weeks, we'll know that this guy was spot on in his action. All right, that's going to do it for the odd block. And now we're going to roll right into the Express Block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the Express Block. This is the portion of the show where we dive behind the scenes, peel back the old dark OX curtain, if you will, and see what's going on in the OX machine. Mr. Tinov, what is lighting up the tape? What is causing you sleepless nights? What is going on in the land of OX that our listeners might want to know about?
Okay. Well, I can give you, like I said earlier, just, some of the top trades at Options Express today. And then I just have a couple questions I want to ask you guys, get some of your feedback on in a bit here. But as that's coming up, on the trading desk today, real light volume and lighter than last week, like I was saying before. And, some of the questions, some of the things that I see often that just don't seem to make sense to me. And maybe, Mike and Mr. Sebastian can help me out with. I mean, when you're talking to your customers, when you're placing orders for yourselves, how often are you working limit orders versus market orders? And what would make you choose one over the other? Because I see a lot of times people will, try to buy 100 shares of a stock, and they just don't want to use a market order, even, if it's maybe at most a nickel wide spread, and they try to work it, and it's like, really, and then they'll get a little frustrated, and then they'll just go ahead and place the market order. So, I just kind of wanted to get some of your ideas, because I always kind of let them know, look, is it really that much to you? Just go in and buy this. If they're working a large option position and, it's a pretty wide spread, then I'll say, here, why don't you really ought to be working the limit. But, what do you guys say? What do you do? Sebastian, what do you, if you're talking to some of your, customers, your students?
Yeah. That's actually a really good question, Tim. And the way I always knew, just starting with stock and then moving from options, the way I always knew that I should send my stock order market as opposed to work the stock order was if I saw S&P futures moving against the way I would want to go. So let's say that I was planning on buying IBM. Let's say I had to buy 5,000 shares of IBM. If I look up and I see S&P futures are selling off, well, I'm going to work my IBM order. But if I look up and I see that there's a big, huge bid for the S&Ps and the offer is trading, well, then I'm going to send my market order on IBM because, S&P futures are kind of working against me. And so if you consider that everything's kind of correlated and everything really falls into that basket, especially the bigger stocks of the S&P 500, any trade will tell you that the futures drive a lot of what's really going on out there. And so that was actually the main way I always decided whether I would work something is if S&P futures were working my way.
Sure. I like that. That's pretty good.
And part of that, just to drill down on what Mark said, I think a lot of it comes down to the time sensitivity of the actual order. What's it meaning to do? It sounds like in that scenario, Mark was trying to hedge something immediately to lock in a penny, 2 pennies, a nickel, whatever it was. In the retail space, seldom, if ever, are you in a right now necessity to get out of a trade or into a trade based on a market principle. If you want to get filled, you want to make sure you're filled before you jump in the car to go to work, whatever it is. I always take a look at the NBBO or the inside market to see where it is. And if it's a big order, 5, 10, 50,000 shares, rather than putting it into the market, I'll look at the offer. Let's say the stock's trading at 100 to 110, whatever it is, 10 cents off. I'll go 10 cents through the offer if I'm trying to buy it, rather than putting it at the market where you might hit a pocket of illiquidity and it runs the stock up. It's still very, very – it doesn't happen a lot, but I think a lot of it comes down to what's the time sensitivity in the order that you're trying to do. Are you trying to get into a position? How long are you going to hold the position? If you plan on holding the position for over a year, I don't see what the need is to jump in at the market. If you're looking to get out because you're hedging risk in another capacity, market orders get filled, and you might be best off using a market order in that capacity.
And that's a great point, Auntie Mike. Sorry. The vast majority, I would say, of Tim's clients coming in or customers coming in do not need that level of immediacy. If they're trading at that level of frequency and that size where they need to queue off the SPOOs, they can queue their underlying in whatever XYZ stock accordingly. Then maybe they're playing a different ball game than the bulk of them.
For a big order, it might be something you do. But no, I think Mike and Mark both bring up a great point. I teach my clients that you get in at vol prices and at your price point. And if you're trying to do it, most of my clients, they know what price they want to do something. And so they're always working a limit order. They're looking to sell the S&Ps at a 34 vol, or they're looking to buy NASDAQ at a 30 vol. They actually know what price relative to where things are trading they need to get things done. So if they're looking to sell a condor, looking to sell an iron butterfly, looking to buy a time spread or sell a time spread, they know exactly what price they want to get in and out at. Now, if you're just talking about a little individual stock, yeah, if you think it's going to be up on the, if it's 314 or if it's 258 and you want to know whether it works something, well, maybe then you can use that little trick. But otherwise, put that that'd be the only time you should really use a market order. I'm just really the only orders that I see get screwed with more than market orders are market on open and market on close. So and you're asking for problems if you trade any of those type of trades.
Yeah. You brought up some really good points, perfect points. Like you were talking about the vertical spreads or the butterflies. I think limit orders are the way to go. If you're talking before the market open, when the market's closing, market orders are just really not appropriate, for that time. Almost regardless of what you're trading, whether it's, an individual option or a spread or even a stock. But, there are just a lot of times where, it'll be the middle of the day. Somebody will really want to buy this stock. They'll really want to own this stock. And, they put in a limit order. And I'm really saying, and they get a little frustrated that they're not getting filled. And they ought to give it to me. Or and I'm trying to say, well, how much is it worth to you? Where do you look at, where do you see it going? How long do you want to hold on to this? Because I think sometimes, a market order is really not such a bad thing to use. So I just wanted to get your feedback on how often you guys use either one.
Going back to what we were talking about at the top of the show there, we were joking about Gamatron and the lack of a need for that. But there's a reason why tools like that no longer are necessary. It's because even Joe average retail these days has so much more insight into what's going on in the underlying than we even did as market makers 10 years ago, where they could see depth and limit and what's going on in all of these different underlying books. So that should be more than enough information, I would think, to inform you on where to work your limits in the variety of these names. And if you still can't get filled, do it on T/Monday, Mike says, and you work a little bit through the offers and the bids. I mean, you can see the resting orders. I can't imagine the bulk of the OX clients have so much size that they can't be filled in, the top liquid names within a few cents of the MBBO. I mean, so unless they're working way outside or they have some really time-sensitive issues. I think there's so much information out there now, even on every average retail brokerage firm, in terms of depth and size in the order book on these underlyings, that you really should be able to work a very informed limit, and only in the most minute of scenarios should you ever really, unless you're really chasing, do you want to go to the market. I can think of my own head the number of times when I was on the floor, the number of times I went to the market. It was in some very dire scenarios where, and I usually paid for that.
The only time, the times I went to the market was guy coming in and he's got 10,000 to go on the bid or 10,000 to go on the offer, and everybody's racing to get stock so that we can fill the guy at the worst possible price.
Mm-hmm. Yeah,
that's what
I understand what you're saying.
Yeah, or where some crazy news came out, like this time Yeltsin's really dead, or when Rubin resigned and the S&P took a bath. And then you need to get your futures and your spoos in front of the 50 other guys that are in the pit who are dumping their market orders at the exact same time. And then it's just a free-for-all. But aside from those moments, I don't think Joe Retail really needs to concern themselves with those to that degree. Maybe there are a few who do, but I think for the vast majority of the listening audience out there, you can work informed limits and stay away from markets, stay away from, God forbid, stay away from market on closes and market on opens. Because then you're just asking for all sorts of fun shenanigans.
Right, and I think you guys really, also kind of prove or show, your expertise, that, what you're really talking about are those spreads, and maybe, just some individual option orders. And that I totally agree with you on that. I mean, it's really difficult to tell someone, look, just use a limit order on this. And be patient and work it, or look at the book, like you were saying before.
Another trick too is to look at the option book. If you can't get what you want done in the underlying at a reasonable limit, maybe there's some option spreads. Maybe we talked about scalping gamma with options a few weeks ago. Maybe you instead of dumping some underlying, you dump a call instead against some of your underlying position. And you work into positions that way. If you really can't get done in the underlying, there might be some liquidity lurking in the options book that you could use instead.
Mm-hmm. That's a great point.
Mm-hmm.
A great point. I I always use the extremes in examples, but think of a stop order on the flash crash that became a market order. Triggers your stop, and you get filled at 15 cents on a $49 stock. That looking at a put option versus a stop order, to me, gives you an option that says, hey, look, on some stocks, the way these work, if they become extremely illiquid, I'd rather own a put and, have it weighted delta than just putting a straight stop on it.
Yeah, good point.
Are there particular names, Tim, where people are coming in, they're wanting to work market orders in the underlying? I mean, are these some of these really crazy high flyers like Netflix, or what names are these, or the people are flooding in looking for market orders?
Yeah, exactly. A lot of the big names, Apple, Google, Netflix, Priceline, and those are on, what you're talking about on spreads, butterflies, condors, where, you see them using the market order and you're saying, let's try something else, but then they'll want to go trade stock, and they'll want to buy, 100 shares of GE, or not 100 shares, but, a couple hundred shares of GE, and they want to work a limit, and and you're saying, really, is that really what you want to do? I mean, why are you working? Do you want to in right now, or what are you going to do with the stock? How much are you looking to make? How long are you looking to hold on to it? So,
all the diverse needs of the OX audience. Well, thank you for that, Mr. Tinav. So that's going to do it for the Express Block, and now we're going to roll right into Around the Block.
Around the Block.
All right, and welcome to Around the Block. This is the portion of the show where we discuss what's coming up on our collective radars, what we're watching on our trading screens, and we're back in the thick of it. Yet again, it is earnings season, and we have earnings lighting up the tape, with tomorrow being the big kickoff day. Seems like everyone and their mother is reporting tomorrow. Tim talked about Apple. Of course, Apple coming out tomorrow. We have Goldman coming out tomorrow. I believe Intel and Netflix.
Intel is tomorrow. Yeah.
Netflix, I believe, is that today, tomorrow as well? No, they're the 24th. But you just so many names. Usually Microsoft is usually right on the heels of Intel. They're coming out on the 20th. It's just amazing how many. I believe Citi did them already. And
they did.
Yeah, and 18th, of course, tomorrow, Bank of America as well, Sebastian's favorite holding there. Just earnings galore. There really is. If you're an options trader, you can't find something to trade tomorrow, then you're just not trying.
Yeah, and Mark, I was looking at Apple. This is just kind of one of the things I was looking at today, and you are a blasted fool if you don't buywrite synthetic Apple. And you own a bunch of the stock right here. The 420 calls are not that expensive. The stock's up 10% since last week, and you can't give up $12.50 to cover yourself. You're asking for problems. I have a bad feeling about Apple tomorrow. That don't know what buywrite synthetic is, you sell the stock and buy the call, as opposed to buy the stock and sell the call. And just looking at Apple, here's kind of the math I've done on Apple. And stop me if I sound like a fool, but
Stop.
Particular subject. Yeah.
Stop.
Stock's up 12%. We already know how many iPhone 4S's they've sold. We've got a good idea on how Android phones sold. We saw Google's earnings. We know we've seen patterns of Apple selling off after earnings, and you can get a call, and the downside skew is actually cheaper than upside skew. So that to me is a recipe for way too many people thinking this thing is going up, and expectations way too high. When you see a big equity get a huge forward skew like that, that signals a lot of call buying, which means if it pops up, there's going to be a ton of deltas to go. So I just don't see it. I think it's unchanged to down into earnings.
Yeah, that type of skew is relatively unusual for a big name equity like these. I mean, these types of equities, Apple's probably the exception to a lot of rules, and this is one of them, where typically a big name like this, and it's held widely across a large majority of funds will have a preponderance of upside call selling and downside put buying. So the skew will be even steeper than normal. And instead we're seeing almost the opposite in some of the upside here in Apple because there's so many of the zealots are out there in force.
Right. Now, hey, I was thinking today, Mark and Mike and Tim.
Always a dangerous occupation for you, sir.
I know. Apple is such a unique product. It's really culturally and it's as significant, if not more significant, than IBM. So if IBM is Big Blue, I was thinking we start calling Apple Red Dawn. What do you think?
The apocalypse is coming. Watch out for the Russians in your backyard.
Yeah, well, we all remember the commercial from the 80s, right? And we all remember, or we just call it Red, or the Red Sun, or the Land of the Rising Red Sun, something like that. I think, but at this point, Apple deserves a nickname, is what I'm saying. And I think it should fall on our listeners to come up with nicknames.
I like Crazy Pants Land because it's just madness out there. The zealots who are just adhering to the Apple mantra.
I challenge our listening audience. Email us at the Option Block. All of your ideas for nicknames for Apple, and we're going to choose the best one, and the winner is going to get a full assortment of goodies.
Apples.
A full assortment of apples. And
big apples.
Self, OX.
A bushel of Macintosh apples headed your way.
KYO, right. Option Insider. They'll get some goatee trimmers from Option Insider.
Especially branded.
I'm looking at the option chain on Apple right now. Mm-hmm. And the October, the front month at the money, it went out at $419.99, so we'll call the 420s the at the money. The at the money straddle is trading for about, we'll call it $25, a hair under $25. So if we take Mr. Sebastian's thought, hey, we're going down, there's an unequivocal skew to the call side, which is abnormal. We want to sell the stock, buy the at-the-money call for $12.50 and just ride it down. Let's play the devil's advocate. Let's say, look, $25 is the expected move, so it could go up to $4.45. If you're that bearish, can't you kind of play that at-the-money straddle and say, look, I'm going to short the stock, buy the 420 calls for $12.50,
mm-hmm.
and then I'm going to sell the 445 calls for $3.80. So
that would take some stones, because I like the trade. The only issue, Mike, that's not a bad play. I mean, it really reduces the charge. You only run into trouble if this thing runs up to 460, 470. I thought you were going to go with some sort of ratio spread where you sell like the 420s and buy the 410, 405 tree.
I was waiting for the 1 by 4,000 here in Apple.
No, yeah.
We already have that on.
No, but
getting out of it will be the trick.
You could sell the 420s, buy the 410s and 405s, and if Apple takes that 25-point dive, you're going to do okay, and if it rallies, you're kind of a break even. But Mike, that's actually a really good play. I like that idea a lot. Tell you the truth.
I like doing it both ways. I like buying the stock, buying the 415 puts, the at-the-money puts, selling the 400s, and then going up the chain and selling, maybe the 430 calls. Just do a net credit, I guess you could call it a knockout collar.
Yeah, I mean, it's certainly a unique trade.
Yeah. I mean, Auntie Mike, as the one who probably has the most skin in the Apple game right now, I know you guys rolled up some of your downside here. What do you have on going into earnings tomorrow? Have you taken a lot of it off the table already with this vol pop here that we've seen, or the stock pop and the vol crushing we've seen here?
That's a great question, sir.
I mean, we've ran up like 70 handles in the past few weeks in Apple here.
Right now, Apple, we are short the Nove 425 calls, long the OCT 370 puts. That's what we got.
All right, and you still have, I'm assuming, underlying on there as well.
Still own the underlying, yep. Have owned the underlying for quite some time.
So you've legged into something similar we've been discussing here then with
yeah, absolutely.
In aggregate
and,
across.
Looking kind of legged in, kind of are playing it probably a little bit more to the bear side, being short the 425 call and long the 370 put. At 370 put is in October, it's really not there for anything. So we're basically in a no covered call at the 425 strike.
Yeah, I mean, we've talked for a while about the Apple zealots. I won't go on at length about them here, but I think I have to lean a little heavier to the downside myself, because I've been saying that for a while, and Apple has repeatedly ignored my prognostications.
It does have a tendency to disappoint on earnings, is one of the things I've noticed. It rallies back, but it does tend to disappoint on earnings. Just saying.
Yes. So, and Apple, obviously, the big name. Everyone is watching tomorrow. I'm sure if everyone else could have a positive result, and if Apple screws the pooch, as they say, we will be seeing a dark day tomorrow. Though somehow I'm guessing with so many mediocre phones lighting up the tape that I don't think Apple's going to disappoint, at least tomorrow. I mean, I know what you're saying, Mark, but I think Apple does a decent job of kind of like the old Microsoft way of massaging the earnings. They still manage to massage the expectations to the point where even if they miss, they don't exactly crush to the downside. Is that your expectation?
But how do you I don't think they're always after Google and the fact that Google reported. We know what kind of the iPhone is doing. I don't see how they catch anybody off guard, and especially with this big rally they've had of the thing. If they hadn't rallied 45 handles off the low, then I would agree with you. But the fact that we're not trading 385 means a bunch of this move's built in. And if Apple doesn't exceed or meet the whisper number, I think it really takes a dive.
I agree with that. Apple's kind of out there. They sell widgets, even though they're cool widgets, and there's like a whole sector of society that you could call like iSociety. Google, I think there's still people that don't know what Google does. Google can come out and say, hey, we made this much money this quarter based on this, and people would be like, wow, I had no idea they were making money that way.
Some days I wonder if Google knows what Google does. They have so many disparate elements at work in that play there. It's just, it's amazing. Whereas Apple at least has a handle on a few related ecosystems there, and they play in and amongst them.
Well, I was just going to say, I'll be interested to see. The one thing I'm going to be watching is, I'll be interested to see if they say anything about what they think of the fire and what effect that could have on their business.
Yeah, like we said on the show before, I've become increasingly enamored with Amazon over the past couple of years. I think they're making a lot of the most interesting and I think under the radar plays quite often in the land of technology. Apple eats up all the information and all the PR, but Amazon is making a lot of stealth maneuvers. The Kindle Fire wasn't exactly stealth, but it's very interesting. And as someone who's looked for Apple alternatives for a long time in a lot of products, the one thing they were all missing, whether they're tablets or phones or what have you, is the content ecosystem to make them actually viable and useful. And Amazon has that in spades. So if anyone can come up in the rearview mirror of Apple on that front, it is definitely Amazon. I mean, I haven't seen the hardware, I haven't played with it, but it doesn't need to be able to do much if they have that great content ecosystem behind it.
We're actually going to be giving away one at the Traders Expo in Vegas. Believe it or not.
A good reason for listeners to swing out to Vegas. That is going to do it for this episode of The Option Block. I want to thank my cohorts, my partners in crime, for joining me on the show today, starting off with Mr. Monday Mike, who has to go catch that train. What is coming up in the land of KYO you'd like to let our listeners know about?
Just navigating through this volatility in the marketplace. We did start our Lunch and Learn program, so if anybody's interested and they're in the Chicago area, they'd like to come in and listen to us blab about portfolio volatility, using options to hedge equity positions. We will have a calendar up on our website sometime shortly to go over some of those dates where we bring in some people and go over some hedging ideas, trading ideas using options.
And listeners, if you can't get enough of Monday/Auntie Mike, then stay tuned to the Options Insider Radio Network, where we will be launching the first episode of the Advisor's Option, featuring Auntie/Monday Mike in all of his glory. Of course, we don't apply those nicknames on that show. We give you a fresh start there. But listeners should stay tuned for that, where we discuss all the different reasons and impacts that options can have on a financial advisor and an asset manager's portfolios. That should be launching sometime the next week or so, so stay tuned to the Options Insider Radio Network for that program. The first one's already in the can, and it was an exciting episode.
Very exciting.
I was privileged to have been there and to seen it firsthand.
and just in the headquarters of the bowels of what makes options work at the headquarters
OIC,
of the Options Clearing Corporation. It
was a fun place to record from, the deep in the heart of the Options Clearing Corporation. We could see the little contracts flying by our heads in the pneumatic tubes as we were recording. It was amazing.
You felt the strength of the counterparty at the table.
I felt so safe and secure, and I wondered why. Now I understand why. All right, see, that's the type of gold you can expect from the Advisor's Option, launching shortly on a fine podcast player near you. And then, Mr. Sebastian, what is coming up in the land of KYO? Can we announce your big news yet, or is that still all under wraps?
First, KYO.
I'm sorry, Slinky.com.
No, on Friday, I am going to be giving a presentation with Price Futures Group at the CME on trading futures options. And I'm going to be giving a presentation on Gamma on the CBOE tomorrow. That's Tuesday the 18th.
Will the Gammatron be making a return appearance?
No, it'll literally be on Gamma. I'm literally just going to explain to people that you can be short deltas and long Gamma at the same time. So
I think you should walk in a giant cardboard robot outfit and say, "I am Gammatron." That would be huge.
I am Gammatron, and then I'll transform her into a pistol.
Yes, and shoot the entire audience, thereby defeating
your purpose.
No,
actually, I'm going to transform into transform into an Instanet terminal.
There we go. A very depressing and boring transformer. All the kids want it for Christmas.
Wow! Microsoft's $26.99, $26.98.
Thanks, Mom and Dad.
1,000 up. Thanks, Internet Transformer.
See, I knew we could work Transformers into every episode if we try really hard. All right, and Mr. T-Knob, what is coming up in the land of Options Express, sir?
Well, we will be at the Money Show that you were talking about earlier on the 22nd from 2:15 to 4:15. That time period we have a workshop going on, so come on by.
I'll be down there as well, but I'll just be scouting out the area and I think doing a few video things with them. I'm not doing any booths or any sort of stage shows this time around. I've curtailed that. But yeah, it'll be fun to see. Maybe we'll bump into some listeners down at the old...
Hey, that was fun to do the live show. Anybody that caught the live show, that was a good time.
Yes, we're looking to do more of those. So, listeners, if you weren't able to make it down into the bowels of the Hilton there for the FIA show, we will be taking over more venues and more events and more places to do more live shows.
Alex Jacobson, lady killer.
We did have quite the female crowd when he showed up on stage. That's all
I
I'm
know, it was unbelievable. He's like the Don. He's like the Don Schlesinger of Option Block.
Well, I wouldn't go that far. I mean, Don's in a class all of his own when it comes to sexy and the ladies.
He is. So.
All right, listeners, now that we've besmirched all of our co-hosts and all of our fellow shows, that is going to do it for this episode of the Option Block. I want to thank you, the listener, especially all of you who came out to the live shows we did over the course of several days down at FIA. It was nice to talk to you and meet you and see you face to face, and we hope to see more of you at upcoming events, which we will announce shortly. But thanks again for listening to this program and for downloading and streaming and subscribing and making it such a success. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved.
Regardless of how active you are as a trader or an investor, a firm understanding of the inner workings of market volatility is crucial. You are invited to join pro options trader Mark Sebastian and pro futures trader Jeff Quinto for this one-of-a-kind live event on October 21st at the Chicago Mercantile Exchange headquarters. After Jeff discusses how volatility can play into the hand of a futures trader and Mark covers how to use volatility to trade options on futures, together they'll present unique combination strategies using futures and options in tandem. This interactive event will benefit every level of investor, from the novice futures investor to the most active futures and options day trader. Don't miss this rare chance to see two industry experts in one spot. Please go to pricegroup.com to reserve your tickets today. The cost of this all-day event is $895 before October 1st, with $500 off for Price Group customers and new accounts. Again, please go to pricegroup.com to reserve your tickets today.
The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.